How bad is the economy really going to get? This is a question that I often hear. And so on today's episode, we're going to address it and how you can be prepared for the worst. Welcome to the Homeowner Prep podcast, where every week we educate and encourage aspiring homeowners to help them buy their first home faster. If you aspire to own a home, you're in the right place. So enjoy. Do us a favor and leave a review, a rating, and be sure to subscribe. Now let's get to this week's episode. Hey, real quick before we start, I want to ask you a question. How long are you going to wait before you decide to get started? I mean, you want to buy a house and you're earning income, so what's holding you back? Visit our website at homeownerprep.com/start. You can take an online assessment and set up a free 30-minute call, and we're going to put a plan together to help you get from where you are to where you truly want to be. So don't let fear hold you back from buying your first home. All right, now back to the episode. Hello and welcome to the Homeowner Prep podcast. Thank you so much for joining us on another great episode. You know, on today's episode, we're going to kind of touch on some things that are kind of doom and gloom. You know, if you know me, if you know our podcast, you know our company, we're not the type to focus on the negative. However, we're hearing quite a bit from people who are saying, hey, the economy's pretty bad. You know, what can I do to prepare for the things to come? And so one of our key motivations is to make sure that our home buyers are ready for the worst and prepared for the worst, but we don't expect the worst. And so I do want to just put that out there before I start to talk about some of the things that are going on and some of the concerns that a lot of first-time home buyers are having. First of all, in today's market, what we're seeing as the biggest red flag to buyers are the rise in interest rates. Seems like every other week, you know, we're getting these rate hikes from the Federal Reserve, and they're driving up our mortgage prices because interest rates are continuing to climb up. You know, we had 2% and 3% interest rates just last year. So obviously interest rates are a big issue for first-time home buyers. We've addressed this in several episodes before. We talked about how to get that interest rate down, how to have sellers pay for that. So if you haven't checked out our previous episodes, definitely I would suggest start there. But yes, interest rates are higher, higher, not extremely high, but they are higher. And case in point, back in the 80s, we had interest rates that were in the teens, 16, 17, 18%. So yes, if we're floating right now around 8%, in comparison to 2%, it's pretty bad. In comparison to 18%, it's pretty good. So how high is it going to go? Well, in my personal opinion, I feel that interest rates could go above 10%. Why do I say 10%? Because right now, with the Federal Reserve raising interest rates every time they meet, they are having a hard time reducing inflation. That's the biggest driver and the biggest motivation for them raising interest rates. They don't want to raise interest rates, but they have to battle against inflation. So what is going on? Why isn't inflation dropping? We only saw inflation drop 0.2% from the last time they raised interest rates. Right now, as mortgage rates are 7 and 8%, we're still seeing inflation around 8%. The Federal Reserve has come out and said they are targeting 2% inflation. So we got a long way to go, which means we got a lot of hikes coming our way. Unless something drastic changes, they're going to continue to raise interest rates. So what does that mean for you right now if you're thinking about buying a house? Well, chances are 7 and 8% are going to look a lot better than 10%. Your payments on 7.5%, 8% are going to be much more affordable than they may on 10%. In fact, you may get priced right out of the market when interest rates get to double digits. So if you are qualified now, if you've already been talking with a lender and they say, hey, you are qualified, maybe it's a little less than what you wanted to spend, maybe you can't quite buy the dream home that you wanted to buy, but you can get in the game. My suggestion is that you get in the game. The best thing about owning real assets during inflationary times is that they tend to appreciate a lot better, and you have more stability because you're in a real asset versus your money just sitting in an account getting beat up by inflation. The savings accounts are never going to keep up with inflation rates. Right now, what we're seeing as far as, 8% on inflation, you're seeing high yield savings accounts at around 2%. So obviously you're not going to make up that difference. However, as homes appreciate, you can quickly make up that difference. And that's why a lot of people will start to pour their money during inflation times into real assets as well as you should. So if you're thinking about buying, if you've already been talking with the lender, they said that you're qualified for a certain amount, buy a home, take advantage of today's rates, knowing that they will go higher before they go lower. The good thing with interest rates is that they change. So, as our economy does get worse in regard to, interest rates, you're going to find that, a year, 2 years from now, interest rates may get better. And at that time, you can always, refinance. You can always decide to buy something else if you've had enough appreciation in your home. And so there are opportunities that can come. However, if you're renting, you're not going to have those same opportunities. And here's why I say that. As we talk about how bad things can get, what we're seeing now are the rise in evictions. Evictions are on the rise because people are no longer getting the protection they had during COVID. Those protections are coming to an end. And so if you're not paying your rent, you are being evicted. As well, landlords are seeing that they can charge so much more for rent because there are so many renters in these markets, especially here in California. So depending on where you're at in the country, it may be different. But in California, there are a lot of folks looking for rentals. There are a lot of folks fighting over rentals. People are paying a year in advance for rent in order to lock in a place. And so it's becoming much harder for you to get a rental. And that's a good sign for landlords. They're looking to get rid of their current tenants so they can charge more and make more and pay off their mortgage sooner if they have one by bringing a new renter to rent out the place. So yes, we're seeing a rise in evictions, and we are seeing rises in rents, and we are seeing a very competitive rental market. So that is something to consider. A lot of times people would often say, well, hey, I'm going to wait to buy and I'll just go rent. Well, it's not that easy anymore. Again, if you're facing competition where people are willing to pay a year in advance for a rental, you may not have the funds to do so. So how do you compete? If your backup plan to buying was, hey, I'm going to wait because rates are too high, I can't buy the house that I really want, I'm just going to go rent, you may find it very difficult to find a rental in the area that you want to be in. And so take advantage. If you're qualified, if a lender and a bank say, hey, you're qualified to buy for this amount, get your foot in the door. You want to buy your first place as quickly as you can so you can take advantage of appreciation, so you can make decisions in the future based on having some actual net worth instead of giving all your money in rent to a landlord who's paying off their mortgage faster. So things can get bad. Interest rates can definitely get to double digits. Rental market can be very, very tough. And to be honest, what comes from inflation and possibly recession are job losses. And this is another topic that we talked about in a previous episode on how to prepare for job losses. Again, this is not saying that this is going to happen to you, but we are seeing a rise in the amount of jobs that are being cut. And this is a natural progression as businesses make less and have to make some cuts to help their bottom line. Believe it or not, investors look at job cuts as a good thing. You'll often see a stock price rise after there's an announcement of job losses. And why is that? Well, because investors are looking at the bottom line. They're looking at profit. And so if a company, a corporation is willing to cut jobs in order to improve their profits for the year, well, investors are going to look at that as a good thing. So your job loss could easily be the benefit of some investor. Take that into consideration. Be prepared. You don't want to be caught off guard if you were to lose your job. So yes, I do want you to start putting some money away. I want you to start really dialing in that budget, spending less on frivolous activities. Maybe you don't go on 3 vacations this year. You just go on 1. It's something that me and my family have talked about. And as we prepare for the market and things to come over the next 6 months, we just want to make sure that we're good to go. Now, if the market and the economy doesn't get so bad, hey, nothing wrong with having some extra cash. Nothing wrong with having a more balanced budget. But at the end of the day, you want to be prepared for if things do get bad. You want to control the things that you can control. You can control how you spend your money. You can't control if a job is going to let you go. You can't control where the market is going in the future, but you can control the fact that you're already qualified to buy now, and you can get your foot in the door into a home, buy something, hold on to it, marry the home and date the rate. And as rates change, you can decide to either refinance or sell that home and buy the next home. So there are things that you can do that are in your control no matter what's going on in the economy. And I really want you to take advantage of that. My biggest thing is that you do not freeze on the news and get so afraid of what's to come that you don't take action. You have to take action. You have to do the things that are going to set you up financially for the future. Buying a home is much better than paying the rent. Saving money and cutting back on your budget is much better than losing your job and finding yourself that you're overextended or that you're having to borrow on credit cards, which we're seeing a rise in. So do the things that you need to do to be prepared if things do get bad, but just know that things are temporary. Markets come and go. Economies do good, do bad, but you have to figure out ways to succeed no matter what's going on in the economy. So if you need help and really need to dial in a plan, a budget, and really look at things for the future, definitely visit our website at homeownerprep.com/start. We can easily connect with you, talk to you about these things, talk to you about a budget and how you can be prepared. So visit our website at homeownerprep.com/start. If you just have a direct question, a quick question that you need answered, you can always visit us on any of the social media platforms. We often get the majority of our questions on Instagram at Homeowner Prep. So you can visit us there and ask your questions. I hope you got some value from today's episode. Again, this is not the standard doom and gloom that you're hearing out there, but we do want you to be prepared. We do want to address how bad things can get because you need to be aware and you need to be prepared should things get bad for you and your family. I hope you got great value from today. I look forward to providing you with some more great value on next week's episode. And until then, be blessed. If you've enjoyed this show and got some great value from it, please be sure to rate and review. And if you're checking it out on YouTube, please be sure to subscribe. That really does help us to continue the show and bring in some great guests to help you on your home buying journey.